Hey guys. Hey guys, it's a pleasure for me to be here tonight. My name is Charles Njoya. For those who don't know me, if you're joining this for the first time, I am a tax strategist. I'm a CPA. I'm also a certified tax advisor with the Markala Group. I help you save taxes. I help you avoid taxes, and I help you build wealth. If this is your first time listening to me, please help us build a channel. You do that by clicking the like button, by subscribing, so that you become the first to be notified of our daily broadcast. And this would certainly be of help to you. It's gonna save you taxes. It's gonna help you build your wealth. And you may also want to share these videos with your friends and family, as it may just be life-changing for many people. So today it's a Q&A session. We're talking about LLCs. We're talking about how to manage our LLCs. There's so many questions coming to me on LLCs, and today I want to answer them. My first question is going to be coming from Claire from Michigan. I love Claire. Claire, you've been listening to this program for a while now, and I'm glad that you're a regular participant. Thank you for promoting the program, and thank you for the many questions you ask on a daily basis. So today you're saying that you are a limo driver, and you say, okay, let me read your words. I am a limo driver, and I made just over $130,000 last year. My CPA told me I could save taxes by registering an LLC. Is that true? I am yet to file my taxes. Okay. So, Claire, that's a great question. And I'm going to answer them just the way it is. So, most people think that by registering an LLC, they are just going to save on taxes. That is definitely not true. An LLC simply means a limited liability company. What that means is that when you register an LLC, you're creating a shield between you and the company. So the LLC, as a limited liability company, it basically shields your liability from any exposure that's coming from the corporation, that's coming from the company. Okay. In America, when you start making money, everybody wants to sue you. So it is so important that when you start making money, of course, you want to shield yourself from those exposures that are out there. So what an LLC does is that it protects your personal assets from the legal exposures that are coming from the business, if that makes sense. Yes, that makes sense. Okay. The next question. So how can an LLC help me avoid taxes? Okay, so this is coming from John from Minnesota, and it basically kind of ties with the first question that came from our sister from Michigan. So let's listen to this. So he's saying that, how can an LLC help me avoid taxes? John, thank you for that question. That's an incredible question. One of the great things about an LLC is that the IRS allows you to choose. The IRS allows you to choose how that LLC wants to be taxed. Okay, that is where this whole notion of tax savings comes into play. Okay, so I said earlier when I was answering to the first question that the IRS will default an LLC. So an LLC is a membership company. Okay, so what the IRS does is that it doesn't understand what an LLC means. What it basically does is that if you're a single member LLC, the IRS, when you file taxes with the IRS, is going to default you to a sole proprietorship. But if you're a multi-member LLC, it defaults you to what? To a partnership. What the IRS allows you to do is that the IRS allows you to elect on how that LLC desires to be taxed. So basically, it can elect to be taxed as an S Corp by filing a form called a Form 2553. Once you file that form, and again, there are many rules around this, and generally, these are strategic decisions because there are many steps, there are levels at which you can decide to do this, okay? And when you do that correctly, you can take full advantage of certain things. And one of the biggest ones is that you avoid something called self-employment tax. You can avoid self-employment tax on your total income, on your net income from the business. So by doing that, you're only going to apply self-employment tax on a certain portion, that portion that you consider a reasonable income, reasonable wage that you are going to pay yourself. So when you create, once you elect to file as an S Corp, you can avoid that self-employment tax. This again is a strategic decision, and there are many steps around there. And I'll urge you guys to talk to your CPA, talk to your tax strategist, talk to your tax advisor. They are the ones to really help you through that stage, because if you don't do it correctly, the IRS is going to reject it, and it will be just a waste of time, because this costs, I mean, the administration of moving from an LLC to an S Corp means there are so many additional things that you have to do in terms of administration. So you have to determine if this is the right time, or this is the correct thing to do from an economic perspective. Again, you want to speak to your CPA, you want to speak to your tax attorney, or whoever is your tax strategist, because they are the ones who will help you with this. So the next question is, why do strategists always say the decision to create an S Corp is a critical decision? That's another great question. That's another great question. Who gave that question? It's coming from Ellis in Texas. So yeah, I know many people will say it's a strategic decision, because it is actually strategic. Well, I do not tell any entrepreneur to create an LLC out of the gate. So many people think, I have people who come to me, they come to me straight out of the gate with an S Corp already. They have created that S Corp already. If you're starting a company, some people, because they've heard somebody say this, they just go and start a company by creating a corporation. It's nice to have a corporation, but I tell my clients first, generally you basically get the same benefits from an LLC as you would an S Corp. So except for the fact that an S Corp is more expensive to maintain, if you don't maintain the LLC correctly, then you're going to pierce what you call an S Corp. I mean, if you don't maintain an S Corp correctly, it is very likely that you're going to press what they call the corporate veil. You're going to avoid even the main advantage that you get from there. If you don't keep an LLC or you don't keep an S Corp correctly, you're going to pierce the corporate veil. So what I tell people is simple. So, why set an LLC or an S Corp out of the gate when you have that possibility to elect when the time is right? Okay, so I teach young aspiring entrepreneurs who come to me. What I tell them is that if you want to start a business, just go start it. Unless you are in a very strategic business where the state laws are requiring you to create a certain form, a certain kind of corporation or a business, or to be able to register it in a certain form. I would tell most people, 99% of the businesses that most of us create out there, you don't need to go and register it. You just need to go out there and start making money. And first thing is that once you create an LLC or you create a corporation, you're putting yourself into that additional cost of maintaining that company. But if you went out there and then you started a business as a self-employed, as a sole proprietor, you basically start making money, and then you don't have all those administrative bottlenecks around there, or you don't have to manage the registered company. So you have to get to a certain level where you start making money, then you start thinking, now I have got personal assets. I need to be able to protect these personal assets from the exposures of that LLC, or from the exposure of that company, or the exposures of that business. And when you get to that level, that is when you make that decision. That's when I tell my clients, make that decision now to register yourself either as an LLC or an S Corp out of the gate. So it's really a strategic decision, and it depends on where you are at that level of business. If you're not making money out of your business, I see a lot of people, they created an LLC or an S Corp out of the gate, they started doing the business, and then the business fails. Then now they have a corporation in their hands, and they're trying to close the corporation. They don't know how to go about it. It's a whole process to close a corporation. So if you had just gone ahead and started doing the business, then you determine whether you want to close that corporation or you want to go ahead maintaining that corporation. And that is why we say, the decision to create an S Corp is a critical decision. Remember, I just told you one thing. I just said an LLC has that ability to what? To elect to become an S Corp when the time is right. You have an LLC, and I just told you that the LLC gives you the best of both worlds. It gives you the best of a corporation, and it also gives you the possibility of running it as a sole proprietorship. So once you are not making money, you don't want all those hassles, those management requirements around a setup company. You just go ahead and run your business. Once you start making money, you start structuring it, then now you can register the LLC. And if you already had an LLC, for those who have started with an LLC, you can basically elect now to have an S Corp for tax benefits. But if you didn't have an LLC at all, and then you started making money, you get to a certain level, you talk to me, I'll tell you, okay, now is the time to go and register the company. You could register that company today and elect to elect it to be taxed as an S Corp. And then you take the same benefits, even though you just had it today. So it's so important that you understand. That's why we talk about this being a strategic decision. Hopefully I answered that question. Yeah. Thank you. Ooh. So the next question is coming from Charlene from Texas. He says, so what is the profit level where you can start seeing benefits of being an S Corp? And what guides that decision? Excellent question. The first thing I would say here is I don't make the decision for the client. And this is why. I get frustrated. I really get frustrated when an entrepreneur feels that the taxes are for the CPA or the tax attorney or maybe the EA. When you are in business, you must take interest in anything that impacts your profitability. You must take interest in your accounting. You must take interest in anything that impacts the whole existence of the business. And taxes alone, taxes are the single most important or the largest cost of every American and every business, whether your business or your individual, unless you're really making what you call very low income, tax is going to be your biggest costs. So basically, why would you not be involved in what constitutes your biggest cost? The biggest threat to your business is taxes. So I merely guide people in making decisions based on certain risk factors. And I encourage them to get into their business, get to know those things that matter. And that's why I go on here. Because when I speak on here, I'm speaking to the entrepreneurs. I'm not speaking just to tax preparers. I speak to the entrepreneurs, and I want them to understand how these things work so that when they are speaking to their CPAs, when they are speaking to their accountants or whoever is doing their taxes or doing their bookkeeping, they are speaking to them out of a point of knowledge, okay? Or my typical profit level to elect an S Corp is when a business makes a net profit of say $45,000 or more. And this is where, for me, that is when I see the benefits from a cash flow perspective, from a cash flow standpoint of becoming, I see the benefits of being an S Corp start accruing from that level. If you did it when your business just making $10,000, remember I told you that there are administrative costs that are also attached to being a corporation. So once you create a corporation, there are things that you need to do. You have to do payroll. You have to do that. You have to file your 941s. You have to do all of these things. And all of these things are going to cost you money. And you still get to pay self-employment taxes on on these things. So the key is about reaching that level where the cost of doing those associated administrative things that are associated with an S Corp will not will not meet the benefits. So benefits here, the return on your investment will be a lot higher. So that's why I say if you make $45,000 or more as net profit from your business in the year, then I tell you that, okay, you're at that level where we could now elect you as an S Corp. And there's something called retroactive. You can go back retroactive. So remember that when you elect an S Corp, you now get into something called reasonable payroll. And that reasonable payroll, there's an analysis that goes with that. You have to file returns. I've told you about 1120S. So you're filing a tax return for your business. You're filing a tax return for yourself. And these might cost you, all these things will cost you upper of more than a couple of $1,000s. And that is why I tell you want to think about it. Otherwise, when you're still what you call a sole proprietorship, what you're doing you're basically just filing a Form 1040 with a Schedule C. I think that is where this is the reason I suggest when you start making net income from your business. I'm not saying income from all your activities. Net income from that business is more than $45,000. I start seeing a lot of value. I start seeing then I start seeing real value in electing to be an S Corp. The next question is coming from Mandy. Mandy says, what do I need to know as owner of an LLC? What do you need to know as owner of an LLC? Yes, great question. So I was listening to somebody to a very young, talented tax strategist. He's called Carter Carlton. Great guy. And he was explaining something, how many entrepreneurs have a twisted mindset about this thing called LLC. Most people, and even some CPAs, will they make people feel as though, they make people think that the mere fact that you have an LLC is going to save you taxes. They simply don't save you any taxes. They procure many advantages, but saving taxes is not one of them. It's not one of those advantages. An LLC protects its members from the legal exposures of the company, of the business, and that's it. That is why they call it limited liability company. It's a membership organization that protects you from the exposures, protects you as an individual from the exposures of the business. Okay. However, having said that, you can structure that LLC. You can structure the LLC to save you taxes, and that would, other structures can do that as well. But LLCs, because of their nature and because of how rampant they are, one of the big advantages you get from an LLC is the fact that you can structure it and also take advantage. In addition to getting the limitation of liability, you can easily transform it into an S Corp and take the benefits of tax avoidance and avoid some of your taxes. What happens after I create an LLC? Mandy again in Maine. Mandy, this is really an excellent question. And the reason is I hear a lot of people, when they create an LLC, they believe they have a business. I mean, most people don't have any business. They only have a business because they have created an LLC. So you create an LLC and then you keep it home. Every time you want to do taxes, you just go to your tax to whoever is preparing taxes and say, "I got my LLC, so I can use it to reduce my taxes." By the way, I love Mandy. She started working with us last year and is doing great. And I just love working with her, and I'm seeing her business grow. We're doing a lot of things with her. So I shout out to you, Mandy. Once I've created an LLC, I'll tell people, an LLC, you just don't go to LegalZoom and create an LLC. An LLC is a legal document. You want to be careful about how you prepare it. And then the second thing you have to prepare once you get an LLC is something called an operating agreement. And you need an operating agreement for many, many reasons. We'll talk about that in another topic. But once you get an LLC registered and you get your operating agreement, the next thing you need is to go to the IRS and obtain something called the EIN number. That EIN number, which is called an employer identification number, is the same thing as the social security number of an individual. So a business is a moral entity, and it gets its own name, its own code, its own ID. And its ID is what you call the EIN number. It is unique to that business. Just like you have your unique social security number. Okay. So you now need, once you have done that, you've created the LLC in your state. You have an operating agreement, and I'll tell you a lot about operating agreements. Then you have funded the business by going to you have created an EIN number for that business. The next thing, you're going to the bank to fund that business. Funding the business simply means you are going to open an account for that business. Once you open an account for that business, they will require you to fund some money. You have to put some money in the business. You put some money in the business. Now you have separated yourself from that business. Okay. You separate yourself from that business. And one of the things I see a lot is that when people create businesses, they tend to commingle activities, their own personal activities, with the business. And I mean, again, when you do that, it is something that is not encouraged. It is something that is not normal. You have to basically separate your business from your personal. And once you fund the business, you can get reimbursed through something called an accountable plan. And we can talk about that. That's a form of reimbursement of whatever you've invested in the business. But the question that I get from people is, now I have put my money in the business. How do I get paid? How do I get paid? You get paid. There are so many ways. When you own a business and you're a sole proprietor of that business, you are the sole member of that LLC. Whether you've transformed it to an S Corp or whatever, it remains an LLC. What you have to do is, when you need money in that business, you basically can transfer money from that business account into your personal account. You can do what you call a draw. You can draw money from that account. Now, it is the responsibility of your tax strategist, of your tax accountant, to help you structure those, to help you determine they do what they call a payroll analysis to get an estimate of what is a reasonable salary for you to get. And that you can use that estimated amount to get yourself a W-2 at the end of the year. And you can use that to pay your estimated taxes. You can pay your 941s. So you get that estimate, you get that number that you've determined as reasonable salary for the job that you're doing. And then the remaining portion that is remaining of that business income, the net income that you're allowed to draw and use as you want, that one, even though it's taxed, is not taxed as on the self-employment taxes. So again, what happens when you create your business? Number one, you've created the LLC. Number two, you have an operating agreement. Number three, you have to go and get an EIN number for your business. Number four, you need to fund that business. Once you fund that business, now you start becoming the responsible entrepreneur who understands how to separate the business from himself. Once you separate your business from yourself, there are certain things you have to get an accounting system. An accounting system would allow you to manage that business and be able to even fund the business more. So basically, I tell people accounting is not a choice. Accounting is a must. When you have a business, what is going to help you avoid taxes the most is that accounting system. I hope I answered this question. And from there is a lot that can be developed from here. You have a business, there's a lot that you need to do. But these are the basic steps that you have to take as you grow your business. The next question is, how do I pay myself from my business? Am I being taxed when I take money out? Charles from Minnesota. This is an excellent question, but I think I've already kind of alluded to it in the previous question. Okay. Responsibility is critical as a business owner. You have to be responsible. You have to be able to manage, because now you just created a second EIN, a second entity. So you have to manage yourself and you have to manage that business. If you don't manage that business correctly, guess what? It's going to affect you as self. So one of the key things I tell clients is to completely avoid commingling on funds between business and personal funds. And that is why you create a bank account. You create a bank account for that business. And again, you can actually, what I see most of the time is that most entrepreneurs, they don't make provision to pay for the business taxes. The IRS becomes really secondary. And at the end of the year, because they have not planned for taxes, they have all these taxes piled, and they start making payment plans on how they want to pay their taxes. What I tell people is you have to be responsible enough to start making, and that's why you want to have basically two accounts. When you create a bank account, you have a savings and you have an account, you have a current account. You can basically be transferring periodically, maybe 5%, maybe 10% of that income, and taking it, whatever you're making as net profit from that business, you're transferring it to a separate account and putting that as the taxes that you're going to pay. Okay. Until you have determined how much taxes you can pay, you really don't know exactly how much the taxes are. That's why I tell people you can put 10% of that income, of that net profit, as taxes, and then you get to pay that as taxes. So you have to separate your business. Separating your business from your personal monies allows you to plan your business more effectively. And it also, you are, however, allowed to pay yourself from the business through what we call draws. So you can get draws from the business. But when you're getting draws from the business, you can write yourself a check or you get money out, and that money is called a draw. Basically, there's something around that. I get a lot of business owners. They are concerned about, how do I pay myself? Paying yourself is simple. You just make yourself a draw. You get money out of your business. You can take money when you want and do whatever you want with it. It's only, you have to be careful how much you take out of the business, because you don't want to make the business dry as well. And then once you take that money, we are going to determine, we as strategists are going to determine what is the reasonable salary that's acceptable by the IRS to be your own salary as the employee of that company, of that corporation that you just created. So once you determine a fair, what is a reasonable salary, the balance of what you've taken as draws are just going to be, they're going to be taxed anyway if they're part of your profit. But key is always make sure that your business is funded. Make sure that you are not taking all the money out of your business. That is very critical. This is where you need the service of a tax strategist to help you with structuring the business. Another question I got is, how do I pay myself from my business? Am I being taxed when I take money out of my business? Again, I just said it before. Responsibility is critical here. You have to avoid certain things. I think that's the same question I just answered before. So, perfect. Yeah, I think we'll conclude here. We've been here for 30 minutes and we've answered quite a few questions. I'm going to tell you guys, if this was helpful, if you thought this was a helpful session, please go ahead and like our videos. Please share the videos. Please also subscribe to our channels. We are on YouTube. We are on Facebook. We are on Instagram. We are on TikTok. Subscribe to our channels and help promote the channel. And please get you want to click the like button and click the notification button, so that whenever we are up, whenever we throw these videos on a daily basis, you are the first to be notified. And thank you so much. Thank you so much for being part of this. And see you tomorrow for another edition of our program. Bye-bye.